featuring Priceline.com. Why are we featuring it? Because we know the thing is going to report earnings the following week. And they're going to come out, and the stock is up here at a double top daily resistance. And the bottom 10-day and 20-day is bullish. However, because it's an earnings relationship, that Priceline will trade differently going into the report, right up to the very minute of the closing day that it reports, as it will in price. And one of the things that you'll find common is where that lower end of that price support level is, where you would be buying. And with it up here in this neighborhood, if you're going to do calls and puts, you look at where they would shake that lower end down here. This is the top end of that support level. And this is what it looks like in a standard deviation model. Standard technical analysis, okay? I got 13 minutes to the opening bell. This is that peak right there. And you can see the daily reversals back to these support levels. These 10-day and 20-day moving average, which is way down below the market on the daily, because you had that gap, and then you've had a 4-day run, and you've consolidated the lower end of the delta range, and then you bounce off of the bottom. But then again, too, you're selling off of that top handle. So what does that look like? It looks like this right here. So you can tell that people have been selling into it for the fact that this reversal, look at it. It's going to come right there. And what I can say to you is that you're back to this daily lower support level. And, you know, that low was 747 down here, which would pull in the 750 call in line on Priceline. Okay, should you come down and test those lower support levels, you would want to catch that bounce. You would want that stop to be fairly tight, only because if they sell through support, you could get a wick that could overshoot about, in this name, it'd be easy to do right around 743.48 if he undercut it. However, it's a strong support level on this daily. However, let us not forget that once you break out above this 761, you could burn right through that 775 high. It is possible, but remember, you got your jobs report coming out Friday morning, which will be tomorrow on 5/4/2012. So when you break to the right side, you would break out and look for that upside price level to be right around 767, coming right up, or you could say it's 765.73 that you got to clear through there. And you would use a 3579 teeny script. And once you break that shoulder above there, that's to the right side of the market. And your MMT platform will confirm the fact that breakouts happen like this. See, they get on the right side of this. That means at this support level, and you would break through this area, and then you would look at these price levels even right up here, right below 770. Okay, all the way through this whole pricing area now. And there are various other ones that, you know, one thing about daily is that you got to get above 763.36. That's going to be half of this wick or whatever it is right here. That's that right side, see. That's how you break out from the base. So consolidation and breakout would look like that. Featuring Priceline, be looking at the 775 put if it goes up to the high end, and look for the lower end of the 750 call at the lower end of support where they would take premium out and make your engagement. That means make your transaction and your breakout.